Welcome to the deep dive. Today, we're tackling a really common question. If you're thinking about gold, coins, or bars, which way should you lean?
Yeah, it can seem a bit confusing at first.
Exactly. So we want to try and, cut through that confusion a bit, give you some clear pointers without getting totally lost in the weeds.
And we're drawing from a great piece by Doug Young called Investing in Gold.
Hmm.
Should I buy coins or bars?
Hmm.
He's got, 20 plus years in finance and precious metals?
That's right. A really solid source, someone who definitely knows his stuff.
For sure.
So our mission today really is just to pull out the key differences, the pros and cons, the things you need to weigh up to figure out if coins or bars make more sense for your own situation.
Sounds good. Where should we start? Maybe just the physical basics.
Yeah, good idea. What are we actually looking at? What is a gold bar versus a gold coin?
Okay, so gold bars, Doug points out they're usually the larger ones, often rectangular,
Right.
and the size can vary quite a bit,
Hmm.
from maybe 1 ounce up to a kilogram, sometimes even bigger.
Whoa, a kilogram bar? That's substantial.
It is. And that size obviously impacts how you'd store it and move it around. Think like handling a brick versus something smaller.
Yeah, good visual. So coins then?
Coins are generally smaller,
Mhm.
round, usually, often an ounce or even less, like fractional ounces sometimes.
So much more portable, you'd imagine.
Definitely more portable. Storing a few coins is, well, a different challenge than figuring out where to put a big bar.
Right. Okay, so that physical difference must play into things like value in selling them, right? Liquidity.
Absolutely. That's the next big point Doug makes. Both are considered liquid. You can sell them pretty easily. There are established markets.
Okay.
But the smaller size of coins gives them an edge in flexibility. Big time.
How so? What does that mean practically?
Well, imagine you need some cash, but you don't want to sell all your gold.
Okay.
Doug uses this example. It's much easier to sell, say, 2 or 3 1-ounce coins than it is to, like, saw off a piece of a kilogram bar.
Uh-huh. Yeah, I can see that. You can't really sell part of a bar easily.
Exactly. So coins let you liquidate just a portion of your investment much more easily.
That makes a lot of sense. Okay, so flexibility is a big plus for coins there. What about the price you pay? The premiums.
Premiums. Good point. So the premium is just that extra bit you pay over the actual spot price of the gold itself.
Right, the manufacturing, distribution, dealer costs, all that.
Yeah. And generally speaking, gold bars tend to have lower premium.
Or why is that?
It's kind of like buying in bulk. It's often cheaper per unit or per ounce, in this case, to make and sell one large bar than lots of small coins.
Okay, economy of scale.
Exactly.
Yeah.
Doug even says, and I'm quoting here, if you prioritize gold purity in your investment, then bars may be a better option. The lower premium means more of your money goes directly into the gold itself.
Gotcha. So bars are more cost-effective if you're buying a decent amount and just want the gold content.
Pretty much, yeah.
But coins often have higher premiums, you said.
They often do, yes.
Yeah.
And that's usually because there's more to them than just the gold weight.
Like what?
Well, think about famous coins, like the American Eagle or the Canadian Maple Leaf. They have designs, sometimes historical significance.
Ah, the collectible aspect.
Exactly. There's often numismatic value based on rarity, condition, design, history, layered on top of the gold value.
So you're paying not just for the gold, but for the coin itself as an object.
Right. Which leads nicely into the advantages of coins that Dud talks about. That historical significance is a big one for some people.
Holding a piece of history, almost.
Yeah, some coins have been around for ages, passed down. It adds a different kind of appeal beyond just the investment side.
And the collectible value you mentioned, can that actually be significant?
Oh, definitely. Doug points out that rare or limited edition coins can sell for way more than their actual gold belt value.
So it becomes like a dual investment, gold and a collectible.
Precisely.
Yeah.
And for some, it even turns into a hobby. Go to coin shows, auctions.
Interesting. Oh, and we already touched on the flexibility advantage for coins, too.
Yeah, worth repeating, though. Being able to buy or sell in smaller amounts is a huge plus. If you need cash quickly or want to invest gradually, coins make that much easier.
Makes sense. Okay, let's flip it then. What about the advantages of going for gold bars?
Well, we mentioned purity. Bars are typically like 99.99% pure gold. 4 nines, they call it.
That's incredibly pure.
It is. And as we said, they come in those larger weights, which is just more practical if you're looking to put a significant sum into gold. Buying 51-ounce coins versus 150-ounce bar, for instance.
Right, simpler transaction maybe?
And crucially, those lower premiums we talked about. If your main goal is just maximizing the amount of pure gold you get for your money, bars are generally more cost-effective, especially for larger purchases.
So less markup per ounce.
Exactly.
And what about storing them? You said bars are bigger, which sounds like a disadvantage for storage.
Well, yes and no. Doug actually points out their uniform shape, usually rectangular, can make them easier to store efficiently.
Like stacking bricks.
Kinda, yeah. You can stack them neatly, potentially taking up less total space than the same value in, say, tubes of coins, especially if you have a lot.
Okay, I see. So for large quantities, bars might actually be more space efficient.
Could be, yeah. So Doug gives this neat little summary. Bars usually have lower premiums, higher purity, larger sizes, but less collectible value.
Than coins.
Generally higher premiums, purity can vary, but many bling coins are also very pure, smaller sizes, and potentially high collectible value.
Okay, that's a clear breakdown. So how does someone listening decide? What factors should they weigh up?
Doug lays out a few key things. First and foremost, what are your investment goals?
Okay, like long-term versus short.
Yeah, exactly. Are you buying gold as a long-term safety net, a hedge against inflation, or are you maybe interested in shorter-term trading or hoping for that collectible value to grow?
And how does that map onto bars versus coins?
Doug suggests bars often make more sense for long-term holding. Buy it, store it, benefit from the lower premium. Coins, with their flexibility and potential collectible upside, might appeal more to shorter-term thinkers or collectors.
Right. You got to ask yourself why you're buying the gold in the first place.
Absolutely.
Yeah.
Then there are market trends.
Always tricky to predict, though.
True. We're not giving advice here, but Doug notes that gold often tends to do well when the economy looks shaky or there's geopolitical uncertainty. It's seen as a safe haven.
Something to be aware of in the background. What else?
Your budget, obviously.
Oh.
Bars, even small ones, need a bigger upfront investment, usually because of the size. Coins let you start smaller, by fractionals even.
So accessibility for smaller investors might favor coins.
Generally, yes. And then storage again. We mentioned bars might be space efficient for large amounts, but maybe you only have a small home safe.
Right. Storing a few coins might be easier in that case than finding space for even a single large bar. A safe deposit box might become necessary sooner with bars.
Could be. And finally, liquidity needs. How quickly might you need to sell some of it?
And we covered that coins are easier to sell off in smaller chunks if you hit an emergency or just need partial funds.
Exactly. That flexibility can be really valuable.
Okay. Before we summarize, maybe just a quick step back. Why is gold so popular anyway? People have valued it for millennia.
Doug touches on this too. It's been a symbol of wealth, a reliable store of value forever, basically.
Because it's rare, durable.
Yep. It doesn't corrode. It has intrinsic value. And in modern finance, it's often seen as that safe haven.
Right, something to hold when other things like stocks or currencies seem volatile. A hedge.
Exactly. A hedge against inflation, currency losing value.
Yeah.
And it's tangible. You can hold it. That gives a lot of people a sense of security, especially in uncertain times.
Definitely a psychological element there too. Okay, so let's try and tie this all together based on Doug Young's insights.
Sounds good.
It seems like both coins and bars definitely have their place. It's not like one is universally better.
No, absolutely not. It really boils down to your goals, your budget, how much you're investing.
So if someone's thinking, I want to put a larger amount away, focus on pure gold content, get the best price per ounce, and store it efficiently long term.
Then gold bars probably tick those boxes best, according to Doug's analysis.
Okay.
But if someone else is thinking, I want flexibility to buy and sell smaller amounts, I like the history or the look of coins, maybe hope for some collectible value, and need easier options for partial selling.
Then gold coins seem like the better fit for that person.
The key takeaway really seems to be, understand these differences before you buy. Don't just jump in.
Absolutely. Know what you're prioritizing. Is it cost per ounce? Is it flexibility? Is it collectability? That helps guide the choice.
Right. So just to recap Doug Young's main points one last time. Bars generally mean lower premiums, higher purity, larger units, easier bulk storage, but less flexibility and little collectible value. And coins. Generally higher premiums, potentially collectible or historical value, smaller units offering flexibility in buying and selling, but maybe less cost-effective for pure bulk buying.
Okay. And ultimately, the decision rests on your personal investment plan, how much cash you have available, and your storage situation.
Couldn't say better.
And of course, Doug reminds us, and it's always good advice, diversify your investments, do your homework, and always, always buy from reputable dealers. Don't get caught out.
Crucial advice.
Right.
Absolutely crucial.
So, after exploring all this with Doug Young's help, maybe a final thought for everyone listening to mull over.
Yeah.
Considering gold's history as a stable asset, but also its potential to appreciate, how might putting even a small slice of your portfolio into physical gold, whether it's coins or bars, fit into your overall financial picture and maybe add to your long-term security?
Hmm. That's a good question to ponder. It really brings it back to the individual strategy, doesn't it? Definitely food for thought.